Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, and we are now at the 7th of September, 2022, and the time, well, we're at 6:25 p.m. Central Time. So as I look at all these markets and all that's going on, a nice bounce today. Now, we're at a point where if you're a student of the Bollinger Bands and the slow stochastic with it, are you going to lose the downside momentum? You're flirting with it in a number of markets, so we're at a cusp. You'll hear that the stock traders will say, oh, the all-important 3,900 in the S&P, that held the market. It got down under that, and it came back. Okay, I can accept that. But what does it mean? Well, I just want to give you my train of thought on this. First off, you're down pretty hard in Brent. You're down at 86.77. So we were down $4 or $5 today. November crude, WTI, is sitting at 81.60. Bonds and notes not going anywhere. Natural gas, would you believe this? Not 9, but 7.86. I mean, these are big breaks that have happened. So today being the 7th, 6 days from now, we get the CPI number. That sets us up for then trading whatever the Fed's going to do, a 50 or 75 basis point hike. Do we see a trajectory in CPI coming down? We had broken very hard coming into today. In fact, I read an article first thing this morning that I wrote about. Somebody, I think it was in Bloomberg, had pointed out that we had now had 7 days in a row lower in the Russell 2000, and the market hadn't done that since December of 2018. Okay, just a phenomena. I saw today a turn happening in the dollar versus currencies, and if you had the rules of the embedded slow stochastic, it kept you away from getting involved in much except the euro, which was a probe on the short side that didn't work. But the risk on it was like 6 ticks, 7 ticks on a settlement basis. All right. So what is this going to mean for the metals? Well, that gets to be the interesting part. In the metal market, as I look at copper, China's still got all these problems, and they're still locking down their different areas of large cities. COVID's not going to go away. If they've got a zero tolerance, it's going to spread. Vaccines mitigate it. How do you stop the spread of COVID? That is the difficult thing because it's a virus and it's like the flu. People get the flu every year. I have yet to see where they come up with a virus, and I don't think you've seen it, that stops the spread. It spreads. So are you telling me every time it spreads, they get 150, 200, 500 people get it? They're shutting down cities at a time? Well, it's pretty hard to want to own much in the way of the metal markets if they were the big force, but they're not the big force. If you looked at their import-exports today, a dramatic slowdown. Are you aware that for today, when we normally get the weekly export sales, these are the lowest they've been to China in soybeans since 2015. So they're feeling pain. I think we're going to see that also happen on the energy side of things. It also appears as we get into the metals that the U.S. and Iran are not going to reach a deal on crude, which I applaud. That is the right thing to do. Forget it. Now, where do we go with everything? So let's take a look at what we've got. On a weekly chart of gold, we're back into this area right here, the 1700 zone, where the market's trying to decide, does it do another leg down, or is this where the market tries to get its footing? You cannot tell too much from these charts. You have the trend down, the bias down. We've been that way for a very long time. The market has to take out 1737.40 to negate the pattern of a consistent lower high, lower low scenario, and that would end this wave to the downside, or at least give it a pause, and the resistance should be around the 1750 level if it can do that. If it can't do that, the fact that the market is right now got a high of 1730.70, and if we look at yesterday's high in the market, 1731.20, we haven't yet taken out the high of Wednesday. Remember, we're looking at Thursday trade already in these markets, and that's important. When we come over to the Bollinger Band, you would hit the band down here and here, and the market keeps bouncing away, which is just what should happen when you hit a Bollinger Band. But now you've lost the embedded reading. Let me show this. This is quite important. Here we go. So I'm going to back it off to where you lose it. This is how we came in on Tuesday, yesterday, to the market. This is today. You have a reading now that is over 24, and you immediately, let me take that back, there's your 24, and it didn't immediately gain it back. Doesn't mean it can't, but the odds strongly favor that it's going to stay lost, and price and the 18-day average are likely to come together. So if you were sitting next to me, I'd take my elbow, give you that old like that, and say, hey, you got your money, take money off the table now. Time to be a looker, not a trader. There's a difference. The gold-silver ratio looks like it's making a peak up here over 96, and it may want to get back into that 93 zone, but it's not changing the overall structure that gold is still stronger than silver. In silver, too, if you and I step back and we look at the Bollinger Band, this is so important. Here you are embedded. The market today makes a lower low than yesterday and loses the embedded reading on top of it. That tells you on the close, the way I teach it, the short should be out of the market now. Abandon short positions. The odds favor that what the market's going to do now from here is try to get up to the 18-day average of closes before it makes a new low. Could it be a head fake? Of course. But it is a strong signal and a strong indicator that the downside play for the moment has come to an end. In the copper market, you've just been oversold. What you did is what we talked about. You don't stay under the Bollinger Band very long, 5% of the time, and I have a method where I teach that if you count each settlement under and you subtract that as 1% against the 5% rule, that it won't do that. Now, the 5% rule doesn't mean it's 5% always to the downside or upside. It's 5% of the universe that the market won't stay out of the Bollinger Bands. I took it a step further, and I discovered you on the course of a hand during the year, on a lead contract, you won't find where it gets more than 6 days in a row. So it's a high percentage it's going to snap. It's also a sign it's not bullish. That is a sign of intense weakness. So the market begging to do something. But if it's not embedded, there's nothing to do. In the platinum market, here too, the market came, and as you can see what just happened here, you were embedded, you lost that reading today. If that reading stays lost, you're supposed to be out of shorts now. You'd have to get then a close back under 20. That's going to be very hard to do. The odds favor the price and the 18-day average are going to come together instead of staying apart, and that's what I'm expecting to happen over the next rest of the week probably. When I look at the palladium market, it just got oversold, and as I was telling traders today, I don't see an edge in trying to sell it all into all that area there. You've got headwinds, you got all kinds of things under you. You're oversold, got resistance between 2051 all the way up to 2117 and 2081. Too difficult. Then we get to the dollar index, which closed right at 80. So when it reopens, the odds strongly favor you're going to get a reading under 79, but it didn't close under 79 yet. So the bull trend is intact, barely. And if the market wants to correct, then maybe you're going back to the 108.50 level, wherever that 18-week average comes in. But the whole thing you're hearing me talk about is the Bollinger Bands with the embedded reading. Learn how to work with it. The beauty of the technique is it typically gives you time before the market move happens. In other words, it's a warning, a big warning. Number two, if you just went short or long, yes, there's nothing. I can't tell you that, hey, you're not going to get hurt the day that you put on a position. More times than not, even if you're wrong, the loss is minimal because you're selling a hard rally or buying a hard break if it happens on the same day when you lose the reading. That's been my experience with it, and I'll stay with the experience. I developed this technique, so I really believe I know what I'm saying in it. So what do you want to do now? Well, you want to learn it. You want to learn it on your own, so you don't need me. 13 video chapters. You're going to see what it does. I promise you have Bollinger Bands on your own charting software. I'd be shocked if you don't. You have stochastics. May not have my readings, but when you buy the course, we'll just write us and we'll give you what the readings are and how to modify your slow stochastic so they're identical to mine. Can't make that easier. Take a look at this and get educated. I'm Ira Epstein. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.